Welcome to the show. Look at this background. We are not in Kansas anymore. So today on the Traders Workshop, we're coming to you live from Cabo, Mexico. And we're going to talk about Opex, little Volland in there too, with some dealer exposure. And we're also going to review some of the Trump era policies that are taking effect fast at breakneck speed and what effects they could have on the economy. Let's do that after the bell. Ding. Yeah, you know it's coming.
It's the wrong music today, man.
It's fitting.
No, you should be doing some Latin music.
I could have done that, but you know, it doesn't travel well for some reason. Jason, how are you?
I'm doing all right, Lex. How are you?
I'm good. Well, look at how bad can I be? This is legit. This background,
I know, right?
This is awesome. So no Mark today. Mark is it must be like kitty break or something like that. I don't have kitties, little kitties. So he's in Stowe, Vermont, I think. Does that sound right? Skiing. So Mark is out. Yeah. However, I'm not out, but I just figured I'd do this from beautiful Cabo. This is a great view, isn't it?
Yeah, it's a gorgeous view. You see the palm trees in the back there, and
yeah, it's nice here. It really is.
We've been fake.
Yeah, it really does. It's amazing. So it's a beautiful place. We're having fun. Okay, let's tackle this. We're going to be brief today. So the idea here today is last week we had a huge show with lots of mathematics. It was heavy. It was dense. So we're going to take it a little easier this week and take a breath. Fair to say, Jason?
That's good. Nah, that's a good call.
It was heavy, and we're going to get back to that heaviness in a subsequent show because there's more things to unpack there that we've discovered, as a matter of fact. So we'll do that again in the future. But right now, let's talk first about this Opex. Okay, I don't think I've ever called it Opex. Just so you know, I like the term. You must have made that up or something like that.
No, that's a Twitter thing.
Is it?
X? Sorry, X.
Okay, that's fair. I like it. So what it means is option expiration, right? Mm-hmm. And I think the Opex part of it, and specifically, is referring to that third Friday of the month, which in the day when I was trading on the floors, we only had one of those. We had one Opex per month, and that was it. It was that third Friday. It actually expired on Saturday, right? But now, it's technically the trading day is Friday, but then you could exercise up until Saturday. So that's that third Friday. And it still has this nostalgia of being the expiration, the serial expiration, right?
Yeah.
Do you notice anything different about that expiration relative to the weeklies and dailies and everything? Is there something more going on there?
Yeah. Overall, other than zero DTE, what would we call that in the Opex? Zero Opex. It has the most volume on it. I guess you're not the only one that has that nostalgia for that expiration. There's a lot of traffic goes on that expiration, so it does attract a lot of attention.
Okay, so would you say then, from your data on Volland, most of that dealer positioning comes off on that big Opex, that third Friday? So they're getting rid of a lot of inventory, right?
Yeah, well, comes off is a little bit of a misnomer because a lot of times, even like the week before the Opex week, into Opex week, they're replacing it for the next month. So a lot comes off, but also a lot goes on as well.
Yeah, so they're rolling, essentially.
Yeah, they're rolling.
Okay, well, actually, I take that back. So just so folks understand, dealers don't necessarily roll. They get rolled.
Yes. Yeah,
safe way to say
dealers doing the roll.
Yeah, so if in the old days, if our positions came off, I'd be like, okay, everything's going to expire into stock or cash, depending on what we're trading, right? Mm-hmm. And we're going to have some stock, we're going to have some options, and lo and behold, that's what we have. If no one buys or sells to us in the next expiration cycle, then we have no position, which is sometimes a relief. Sometimes we like to take a little breath, from having to manage all that stuff.
Yeah, well, then you can take a trip to Cabo.
Or you can take a trip to Cabo when you get off of it, right?
Or Vermont.
All right. So what do you see in anything in particular here that's noteworthy of the OpEx, especially SPX side?
Yeah, there's I shared my screen with you if you want to check it out.
Yeah, go ahead. Yeah,
so this is what I've noticed over the past month. If you've subscribed to my Substack, it's on.
That sounds really creepy. I don't know.
Well, it's free. It's wizardofops.substack.com, and it's free.
Okay.
And I used to be doing like a daily tweet
Yeah.
or X or post or whatever you call it. Now I put that into Substack because then I can put pictures up, and it has a lot better flow and it's a little less buggy. So
it just feels like a bunch of people with no shirts on. I don't know. I mean, just saying.
Yeah, Substack is a bunch of people with no shirts on.
Okay,
it's a bunch of sailors in a submarine. That's what that Substack is, right?
Love it. All right, what are we seeing here?
So over the past month, we've been seeing a lot of positive Vanna, a lot of puts being bought, a lot of support, and we could see that here still. This is the option expiration. We see a lot of puts bought down here.
Mm-hmm. Yep.
It produces a lot of support. There is some calls, but not so many. And
what product is this? I can't see it because it's.
Oh, I'm sorry. This is this week's Vanna
in SPX.
Right on SPX, yeah. I'm just talking
about.
SPX
okay, now. Got it. So this is a good barometer of the market at large.
Yeah, well, for the option expiration for tomorrow.
Right.
And you see over here, there are a lot of puts that were bought. Oh, we went down to 6,100. That's interesting. A lot of puts that are bought. It's very supportive, and the market kind of climbed because of it over the past month, right? It didn't really do much. Like we had some of our, like, Trump said something about tariffs and we dropped, Yep. But overall, it was like a consistent grind up until we hit all-time highs yesterday and the day before, but still stayed kind of within a range, very low volatility, right? Yep. And this is the way it looked all month long. But now if we look at after OPEX, right?
Yep.
That would be these expirations.
Okay.
It is dramatically different because now you can see that we have negative aggregate Vanna. So that's -2 billion, -4. So we're looking at negative like 6.5 billion.
Okay.
There is a little bit of support right here, but overall, this strike right here, 6,000 and 5,900 are in the money dealer long calls. So customers are trying to cover on a quarterly basis. They cover their portfolios with short calls in the beginning of the year. The market went up back to all-time highs, and now those calls are in the money. And we are going to see, particularly if we drop below 6,000 here, right here, we could see some downside this month.
Let me take one quick step backwards, okay? Just for the sake of some of the newer people and beginners.
Yeah.
I know your community knows Vanna well, and the folks same with mine. Let's just define Vanna for folks so they understand what we're talking about. And I know we've done it a million times, but let's do it again just in case someone's not understanding what Vanna means.
Yeah,
so
sure.
Can you give it to us and explain it on the call side, out of the money calls, out of the money puts, what it all means, and what does short Vanna mean, and what does that mean with the dealer's position? Long Vanna mean, and what does that mean in the dealer's position?
Okay, so first of all, Vanna is a derivative of the option pricing model. Okay, and it's actually a cross derivative. So it is the impact on delta with changes in implied volatility. Whoop. And what that means is that when implied volatility comes down, but let's say the market doesn't move, right?
Yep.
And implied volatility comes down, then on the wings in particular, delta kind of on an absolute way comes down, right? Your -30 delta put becomes -20, and your positive 30 delta call becomes 20 delta, right?
Okay.
So Vanna is measuring the impact of implied volatility to delta. Okay.
Okay.
Yeah.
Okay. So let me ask a question. Let's say the dealers have, I'm not going to say long Vanna. Let's say they have long calls, out of the money calls. Okay. Is that positive Vanna or negative Vanna? And that's what I'm trying to get to so that people understand what's going on.
Okay. So let's say a dealer
We'll
is
do the side of
holding
the
a
puts
30
too.
delta call.
Go ahead. Yep.
Okay.
Yep.
And implied volatility comes down, right?
Yep.
That 30 delta call becomes, say, 20 delta because now there's less of a chance to get there.
Right.
So it comes down to, say, 30 down to 20. Therefore, because they're going in the same direction, Vanna is positive for a long call out of the money.
So a long call out of the money, Vanna is positive.
Yes.
Because if implied volatility goes up, you're getting longer.
Yes.
Is that why it's positive?
Is what positive?
I'm asking, is that why we consider it to be a positive?
Yes.
Because when Vanna goes up, or I'm sorry, implied volatility goes up, and you're long those babies, you're getting longer.
Yes, that's right.
Great. Let's talk about the put side now, and maybe we have to talk about the short put side. I'm not sure, but let's figure it out.
Yeah, well, we could talk about short puts, but if they're out of the money, then a short put would technically be a positive 30 delta position, right? Let's just say if it's a 30 delta put. Now, implied volatility comes down. That 30 delta short put also comes down to 0.2. So an out of the money short put is also positive Vanna.
Okay, for the same reason that, again, I think of longs and shorts, so sorry. Negative 30 delta put, volatility goes up. We're going to get to negative 40, negative 35. That means that's getting that dealer longer. He or she is going to have to do something with those extra long deltas.
Yes.
Okay,
that's
got
right.
it. So short put, out of the money put, long Vanna, long out of the money call, long Vanna, and you flip all that over, you get the opposite.
That's correct. However, we also need to talk about in the money calls because that's what we're seeing here at 6,000 and 5,900. Why is this a drop, right? And that's because if, let's say you have a 70 delta long call, which means it's in the money. When that expires, that doesn't expire at 0 delta. That expires at 1 or 100 delta.
100 delta,
right? So when implied volatility is coming down on the 70 delta call, that delta is actually going up to, say, 80 or 90, right? And because of that, when that call is, the out of the money call that we said was positive Vanna goes in the money, it becomes negative Vanna.
Okay. So that when implied volatility goes up, that delta goes down.
Yes.
That in the money. So you're getting shorter as a dealer, hence the negative part of Vanna.
That's correct.
It's actually really important to understand that, folks, because when you cross over strikes, different things happen, right? It's just this true effect right here. And you said that you saw at 6,100 a little stickiness there. There was a little support.
Yeah, that was for this Opex. However, when people start talking about like gamma sticky strikes, right? Gamma is actually maximized at the money, but Vanna is 0 at 50 delta because you can raise or lower implied volatility. If the price doesn't move, it's still half and half chance to ending above or below current price, right? Or above and below the strike. Because it changes sign as you cross over, implied volatility doesn't automatically just change direction, right? It still is climbing or something. So then price kind of tends to stick on these Vanna strikes, in particular, the long calls and the short puts.
Okay. So how would you describe generally, with what you're seeing in Vanna for SPX, where the key points are? I know you said 6,100, but are there points outside of where we are now that are important points based on where Volland is showing us? So Vanna contingency.
So what I'm showing is the March option expiration month, which because of contango and implied volatility, the 30 days tends to be more reactive than like the whole option plane. So I usually like to try to pay attention to what's going on this week and next week, and then over the 30 days. But we'll just do a quick swing look right now. The 3 big strikes I'm looking at is first 6,000 right here. If we cross below that, I mean, all the support becomes negative Vanna. So I think that this is something that I'd be looking for. If we lose 6,000 and, around like I'd start getting concerned around 60-40, this kind of area. But if we lose 6,000, we can get quickly a vol event. We could drop very swiftly down past 5,900 as well. Okay. So I think these two are the big strikes, 5,900 and 6,000.
Yep.
But on the plus side, if we get some bullish news or we get something that causes the market to go up, if we pass 6,250, then we are on a run.
On a run.
Mm-hmm.
Okay. I love it. I love it. Now, do you use your analysis with Volland in individual names as well, or not so much?
Absolutely. Yes.
Probably more profound in individual names, right? And just, so the folks understand, the SPX is $1 trillion market, right? Product. And we're talking about notional of $1 billion. So $1 billion relative to $1 trillion is not a big number. But when you look at a stock, and I always use GME because that was such a shocking move. It had a lot to do with Vanna and Gamma Squeeze and all that kind of good stuff. Those stocks are little bitty baby things that can really be swung around based on dealer positioning. So I would imagine there's a more profound effect in some of these individual names, right?
I would say it depends because, a lot of our studies have shown it takes about 25 billion in notional to move SPX 1%, right?
Okay.
SPX, you're right, is a multi-trillion-dollar market cap, but it also has the highest notional traded on it, right?
Correct.
Per day. So it does have an impact, quite a bit of an impact. But you're right, though, when there is a illiquid underlying like GME, and suddenly there's a lot of option traffic on it, then next thing you know, we're going, it can really change the dynamics of that underlying.
Okay. All right. Let's that's great. That's great stuff. And if you're not looking at Jason's stuff, you can find him at vol.land. Is that right? See, good place for you. So make sure you check him out there, and you can see that on the website so that you can. Is there a freemium model too? Can they try this for a little bit?
Well, I mean, we have a cheaper model, and we also have on that Substack we have a subscription service where I give you earnings plays, which, by the way, earnings plays because of the implied volatility shift after earnings. Earnings plays have great impact in Volland. So we use for individual names, we use that a lot.
Yeah.
And then as far as we do have like a basic model, but coming out soon is a free learning management system, an LMS, where I'm uploading a bunch of videos, some quizzes, some practice things. So I mean, it's that's coming soon. So join our Discord and stay tuned.
Perfect. All right, good. Let's move along. So President Trump, he's kind of put in place a few policies, hasn't he? We talked about this pre-show a little bit. What are your two favorites, and what are the economic? I know we're going to talk. It's got to be immigration or lack thereof, and probably the tariffs are probably two most on your mind.
If I'm talking strictly from an economics point of view, the tariffs seem to have a large impact on the market. Every time Trump comes out and says, 25% tariffs on aluminum, we get a 40-point dip in the market, right? So I think the market is very in tune with tariffs, especially in their punitive nature. I think that, what was it? Not long ago, as we link up immigration and tariffs, we tried to send a couple of planes down to Colombia and deport some immigrants down there. And Colombia turned the plane back, and then Trump is like, all right, we're tariffing you. And they're like, okay, you could bring the planes. But they tend to be punitive in nature. And so is Lex frozen or am I frozen? All right, I'll keep talking, and if I'm whatever. They tend to be punitive in nature. So typically I like, tariffs that are economic in nature. For instance, in Trump's first term, there were tariffs he put on China because China was trying to flood our market with goods. All right. I guess we lost Lex. He's probably spilled a pina colada on his keyboard, right?
You're on your own.
What happened, Luis?
You are on your own.
All right. Well, that's fine. I'll just rant then. So anyway, Trump's tariffs in his first term were economically based. So China has had tried to flood America with goods, just all kinds of stuff, and they have lower labor practices. So because of that dynamic, we were losing jobs. A lot of people were sending manufacturing over to China, and Trump decided to start imposing tariffs on China. It was an economic reason to try to make up the gap in labor standards and economic. Hey, there he is.
What happened there?
In labor standards, right? So,
yeah.
Well, I'm in a soliloquy, so hold on one second. So that is an economic-based tariff, and it makes total sense. It's the way tariffs should be.
So I know I got somehow I get disconnected. Let me catch up here. So are you? How would you feel about your analysis of the tariffs? Are you pro-tariff, anti, or somewhere in between?
Well, that's what I was kind of differentiating right now between an economic tariff and a punitive tariff. And now the tariffs that Trump is implementing now are more punitive in nature. So if a country does something we don't like that may or may not be economically based, then Trump is imposing a tariff on that country.
Right.
Say Mexico for not helping with immigration, or Canada for not helping with fentanyl imports, right? So he is imposing the tariff for reasons that are not economic. And those are the kinds of tariffs that can cause inflation on raw materials, what Trump is trying to do, I think, despite, he's trying to give reasons to diplomatically tariff other countries. But I think what he's trying to do is twofold. Number one, he's basically trying to import manufacturing. He's trying to domesticate manufacturing here in America. Stuff like that is not done overnight. So, something like that, the skills required to start, the skills and the investment required in order to start that up in America will take a little time. And in that time, I would expect some inflation to happen because those tariffs are going to be an implicit tax on us.
Yes. So let me say then that I think that's right. I think it's the ultimate goal is what you just said, is to move manufacturing here. The net effect there, we hope, is that it enhances job production, right? Which is great for our economy. However, you did say something important, I think, is that the pain, it's like birthing. There's pain first, man.
Yes.
So we're going to go through a little inflationary pain to get there, I think. Yeah. And I don't think he's explained that well, though. But I think that's something that is probably true. That if we get to the good spot, it's going to be a little painful first, and we'll get to a fertile ground, I think.
Yeah, a couple of times I heard Trump say, "Americans will understand."
Hey,
I've heard him say that
like
before.
This, man, we want it right
He
away.
Said it might be a little inflationary, but Americans will understand. I'm like, okay.
All right, so it sounds like you're kind of pro the tariff ultimately.
I understand what he's trying to do. I think the other thing he's trying to do too is have foreign countries start trying to pay down our deficit. He's trying to gain revenue through foreign countries. And he thinks that the trickle-down effects of inflation would be less than the revenue that he's trying to collect on the tariffs. I do think, I'm for his sake, I hope he's right that Americans will understand at some point. I'm not completely anti-tariff. I do think, but I do think that he needs to be a little bit more diplomatic in how he's going about it. He just announces something and then negotiates later. So, there's a little bit of
it's been a Brew. We'll say that.
Yeah. So I'm not anti-tariff, but I think that just needs to be a little bit diplomatic about it.
Okay. How do you feel about we only have a little bit of time left. So how do you feel about the immigration thing? So tell me about that.
From a strictly
where I'm going to stand on this one. So
from a strictly economic point of view, we will not talk like morality or anything like that, or the dignity of the human, whatever. Strictly from an economic standpoint, I think that there were two reasons why during the Biden administration, despite rising interest rates, that the economy didn't tank like the Fed thought it would. One of those reasons was deficit spending from the government, which was very, very high. The other reason, however, was a big positive demographic spike through illegal immigration. Over the past 4 years, we've averaged, I think it's like 1.6 million, illegal undocumented immigrants per year. And that's a lot. Like, that's a huge boot, what is that? American population is like only 250 million. If we're importing, 10 million immigrants, that's a significant pop in population in 4 years. So there was a demographic spike, and all those people, they eat, they stay in places, they have shelter, they have, needs. So I think that aggregate demand spike from the demographic spike is what kept our economy strong despite higher interest rates. So with that, if we start deporting these people, then we might see a return in aggregate demand down to levels of, I guess you could say more normal immigration levels. But so, and that will take some time as well. I mean, that all won't happen in a month or 2 months. That will happen over a period of, a year and a half, 2 years probably. And in addition to, it is also inflationary because these immigrants are mainly doing unskilled labor. So construction, farming, things like that, like kind of manual labor, cleaning, stuff like that.
So both early stages of these two policies are not going to help with inflation at all. It sounds like.
No, probably not.
It's going to take a bit.
Yeah. But I think also the immigration deportation will be like a slow burn. The tariffs would be pretty quick. So it'll you'll see inflation pop, maybe come down a little bit, and it might pop again with wages going up. See, so because those illegal the undocumented immigrants are they do like the unskilled labor things that have to be done. And usually we kind of associate with like cheaper, like low end construction or farming and stuff like that. Recently in Florida, when those 2 hurricanes hit, and prior to those 2 hurricanes hitting, Hurricane Milton and forget the other one. Prior to that, Governor DeSantis shipped all of his undocumented immigrants out of Florida into Chicago, New York, a couple other cities. And then when those hurricanes hit, nobody was there to rebuild houses, boats, etc. And the labor costs skyrocketed. So, I mean, if you talk to anybody in Florida, you're closer to Florida now than me.
No, I'm not. I'm on the other side of the world.
You talk to people in Florida though about their hurricane recovery, and they said, it's very difficult because there's none of those like low end.
Guess what?
Jobs.
We have another place that needs to be rebuilt. It's called Southern California.
Yeah.
So that could be worse.
And there's a lot of immigrants there too.
Yeah.
So.
Right. Okay. Last thing, and then we're gonna go. Doge. So there's a lot of nastiness under the sheets that's being uncovered. If some of the stuff that this government spends money on, or the government at large, is unbelievable to me. Are they going to really? They're talking about $2 trillion of waste that they're going to find.
Yeah. So
it's
first
insane.
of all, well, $2 trillion on a $4 trillion budget, I don't know about that. But first of all, I spent 16 years as an economic analyst for the government.
Okay.
So I have
Did you find anything?
knowledge. I have firsthand knowledge of how that money gets spent. Yes, you could probably easily trim the government 10%, 15%, and not skip a beat.
Right.
I do think that, and Doge is kind of like indiscriminately a little bit, asking people, take this buyout and go home, that kind of thing. I do like the buyout. I think that's a good option. However, I think that, first of all, the biggest waste is contractors. Contractors cost double what a government employee costs. And so what I think they need to start doing is, and a lot of contractors are doing things that the government people should be doing, like accounting, or even what my job was for 16 years, which is cost benefit analysis and getting through the bureaucracy and making decisions on, really what contractor to use for big projects.
Right.
And I think that kind of stuff needs to be insourced. The HR stuff, the economic analysis, the accounting, finance stuff, that's all contracted out, and that should be insourced to the government.
Okay.
But that's if I'm in charge of Doge, which I'm not.
Well, you should be. I mean, you and Elon would get along, I think.
I don't know. I've never met him. Although I do actually have some subs that work for him. So
nice.
It's interesting to hear the stories.
All right. So safe to say then any tariff talk makes the market kind of head south initially. Yeah. What about the immigration? I don't think that it has a big market effect. It doesn't seem like it does.
No. And I think also, like I said, immigration is kind of like a longer term impact. It won't happen. It won't happen tomorrow. So, so I think the market kind of takes it with a grain of salt for today's pricing.
All right, good. It's nice to be out of earnings season, by the way. I know you want to rub it in my face a little bit. Your Amazon play didn't work. Listen, now every once in a while I lose. Okay, jeez. Give me a break.
I don't want to rub it in your face. I mean,
rub it in my face.
Honestly,
okay,
look, from the bottom of my heart, I want you to win.
Oh, thank you. I appreciate that. I want you to win too. All right. Let's roll, baby.
I don't root against anybody.
You're a good man. All right. Well, good to see you, man. Next week we'll have, I think we have Mark back. I'll actually be back in the snow, which will be fun in the cold. So we'll do our normally scheduled places for next week. Good to see you as always. Find him at vol.land. And what else? Give me another one. Addeum or something like that.
Addeumfunds.com.
No one's going to be able to spell that. We'll roll through. Don't worry, one of these days. And then don't forget to email me at lex@tradier.com if you want to talk options or get on a call. You get your hat? There you go. Perfect.
There you go.
Excellent.
Addeumfunds.com. That's an RIA. So if you want financial planning services or risk-controlled funds, that's where you go.
Got it. And don't forget to sign up for the hub, hub.tradier.com. It's all free. And we have a big trading contest coming up. We'll give more details on that as it plays out. And the summit is coming too on April 9th. So be aware of that. We have a full day of education from various people in the industry. It'll be a great day. And that's April 9th. And I think it starts at 10-ish Eastern time. So there's more info on that as we near. All right. Sound good?
Sounds great.
Have a great rest of the week, Jason, and a great weekend.
You too. Take it easy, Lex.
Bye, everybody. Bye.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.